Welcome to the Buff Show. So today we have our monthly market update. This just came out like yesterday. So we're comparing March of 2024 with March of 2025. And today is April 15th, tax day. Make sure you get your taxes done.
Get those checks in.
Get those checks in. I actually sent mine in this morning.
Michaela was mailing ours today.
Really? Make sure it's post-dated.
Yep.
For
today.
I did yesterday just to be safe. So anyways, this is our monthly update. So one thing I want to know, this is interesting. Like I just looked up how many listings are active on the market today versus April 15th of last year. So last year there was 7,559 new listings, or not new listings, just listings active on April 15th last year. This year, there's 11,063 listings active on the market today, which is a 46.33% increase.
That's huge.
Which is crazy. Which we're going to kind of jump into this, but why don't you lead us off?
All right, we're going to hit it hard. We're going to hit it quick. We're going to start with new listings, a count of the properties that have been newly listed on the market in a given month. In March of 2024, there was 4,979. And in March of 2025, there's 5,946. So we saw an increase of 19.4% of new listings on the market compared to a year ago.
That's crazy. Yeah.
That's huge. That's a lot.
That's huge.
That is wild.
Okay, Big P.
All right. So pending sales is a count of the properties on which offers have been accepted in a given month. So 2024 in March, we had 3,926. And then in March of 2025, we had 3,785, which is a decrease in 3.6%.
Less people buy them.
Less people buy in, more listings. Okay, closed sales, a count of the actual sales that close in a given month. Last year, March 2024, we had 3,523. This year, we have 3,424. So a decrease of 2.8%. Less sales happening right now, too.
Two indicators showing that.
Days on the market until sell. So this is the average number of days between when a property is listed and when an offer is accepted in a given month. So March of 2024 was 60 days. March of 2025 is 65 days. So that's an increase of 8.3%. So your home is more likely going to sit on the market for just a bit longer.
So, and keep in mind that is from the day that you are listed to the day you have an offer accepted, not to the like closing and when you're moving out. Yep. The typical closing is what, 30 to 45 days on average? Mm-hmm. Okay.
Next, we got median sales price, point at which half of the sales sold for more and half sold for less, not accounting for seller concessions in a given month. In March of 2024, median sold value is $494,205, and March 2025 was $501,395 for an increase of 1.5%. So if you're looking at median sales price, home values went up about 1.5% year over year.
Which if you look at like this whole past year on this graph, like 2024 to 2025, it's just been like a plateau.
Mm-hmm.
Yep.
So.
All right, then average sales price. So this is a little bit different than median, but average sales price for all closed sales, not accounting for seller concessions in a given month. So March of 2024, we were at $755,315, and then in March of 2025, we're at $734,052. So we again had another decrease of 2.8% right there.
If you're looking at home values, you're getting two separate indicators indicating two different things.
The median is expressing a bit of an increase, and the average is expressing a bit of a decrease.
Which I think that just tells us it's plateaued.
Yeah.
Basically. Percentage of original list price received. So this is a percentage found when dividing a property's sales price by its original list price, then taking the average of all the properties sold in a given month, not accounting for seller paid concessions, what's seller paid concessions?
So basically, that's just when, let's say you make an offer and then you ask for closing costs. And that's the seller is helping the buyer paying some amount of money towards closing costs that can be used or allotted for multiple different things.
And I've seen closing costs or concessions, like I've seen it anywhere from like a couple grand to like I had a deal where they were asking for 40 grand in seller paid closing costs.
Jeez Louise.
I feel like right now it's pretty common to get like anywhere from like 1 to 2.5% in closing costs.
Yeah.
Right now.
So Yeah, and there was a property we were doing a CMA report on. It was in Riverdale, about 500,000. And out of the comps, out of 10 comparables, 8 of those listings, the sellers paid for closing costs. So 80% of the time, I would say it changes like depending on the price range and where you're at. But anything under $1 million, you're probably going to be dealing with some type of closing cost situation.
For sure.
So last year, March of 2024, sellers were getting on average 97.5%. This year, sellers are getting on average 96.8%, a decrease of 0.7%, which I guess if you were to keep in mind, like Kade was saying, sellers are negotiating 1 to 2% on average. So this number really is probably closer to like 95% of list price received.
And I would say that's pretty common,
Yeah. What's that? So for every $100,000, sellers are negotiating on average $5,000 off of list price.
It's also showing that there's a little bit more unrealistic expectations as compared to 1 year ago of sellers' expectations for a sale price.
Yeah.
And also keep in mind, like that is percentage of the original list price. That doesn't, if you're dropping price and stuff like that, that's a little bit different number. But from your original list price, you expect about 95%.
Yeah.
This is the Housing Affordability Index. So the index measures housing affordability for the region. For example, an index of 120 means the median household income is 120% of what is necessary to qualify for the median priced home under prevailing interest rates. A higher number means greater affordability. So March of 2024, we were at 76. March 2025, we're still at 76. So we're actually a bit more affordable than February, January, December of this last year. But we're still, historically, things are not very affordable.
No, but we're at like lowest levels of affordability that we've seen in a long time. So not very affordable.
Not very affordable. For inventory of homes for sale, the number of properties available for sale and active status at the end of a given month. So for March of 2024,
we need a drum roll for this. Because this is one of the biggest shifts that we're seeing right now.
March of 2024 was 9,999. March of 2025 was 13,382 for an increase of 33.8%. So you're seeing 33.8% more homes available on the market to go and gander and try to buy, which is a big one.
That is a big one.
That's a big number.
Talk about, I'm sure.
All right, and then months supply of inventory. So the inventory of homes for sale at the end of a given month divided by the average monthly pending sales from the last 12 months. So in March of 2024, we had 3 months supply. And then in March of 2025, we're at 3.9, so almost 4 months. So gone up about 30% on that one too.
Absolutely.
Pretty close with the total supply.
So now let's get into it. Let's talk about what we're seeing, because these are all numbers, like all these numbers that we're seeing are like the past 60 to 90 days of transactions, basically. Like the homes that sold in March went under contract in like February.
Yeah.
And were listed in January. So it's kind of a lagging effect. And one thing I want to point out, like I was drawing lines on this chart because what we're seeing and what we kind of talked about in the beginning is like inventory is up like 40 to 50% depending on where you're looking at, which areas. Like up in Cache Valley, it's crazy how many new listings are up there. They're up like 40+%, which is wild. One thing I want to point out is your days on market. If we draw a line, where was it? If we draw a line going back to, let me find the days on market.
Right there.
So, here we go. Yeah. So days on market, if we draw a line where we are today, and we run it back to where we hit like a kind of an equal time in history where we were at on like 60-ish days on market, it puts you back around 2015 ish, 2015, 2016. And then I did that on the inventory of homes for sale as well. And it puts you back into like the 2015, 2016 realm. And then I did it on the month supply of inventory and same like timeline. So I think right now, as long as we don't get a whole lot more inventory, like we'll be in a fairly stable market. But if we get much more inventory, it's going to push us into like that 2012 level where we have more listings, and then that's going to push days on market up. And then I think we'll see our prices start to get hit a little bit more, because right now our pricing is just kind of plateaued. Like not a whole lot's happening there, but we are seeing a ton of action on the inventory side, which if you're a buyer, it's super nice because you have all these options to choose from. You can take your time, but
I also don't want to scare people either, because if you look at the inventory of homes for sale and then you go back to like 07, 08, like we are still, I mean, you're 30,000 at the peak of all of that, and we are still only at under 15,000. So like we're still, I don't think we're getting close to that.
no.
You know what I mean? Like we're not close to like some big
but
recession.
look at these jumps that we're seeing, like 30% more inventory than a year ago.
Maybe, yeah.
So I think we're teetering where it could change, and that's where I want to kind of talk about what we're seeing today on our listings, because that's going to kind of predict where things are going in the future. And interest rates have kind of been all over the
Volatile.
place, but they're right around high sixes.
But they've been sticky at that 6.9 to 7%. It's like every time they think about going to 6.6, they spike back
I
up
know.
for whatever reason.
Just jumps back up. Yeah, like lenders get excited, and then it's like the next day they're like, oh,
Yep.
it's back up. You know,
Basically,
roller
like the
coaster.
lowest you're gonna get right this moment is like a 6.5.
right.
You know what I mean?
I think if interest rates, like that's kind of the caveat here, like depending on where interest rates go, I think that will really run the demand here.
For sure.
But I hope that my thought process, this is getting too big on it, is that if we are having a situation where more homes are coming on the market, the stock market's super unstable and everybody has concerns about it, all of a sudden real estate with more homes on the market becomes a much more attractive investment for the mortgage companies, which you would hope would make it so we get more mortgage companies that lower interest rates. I'm not saying that's going to happen, but if the prices stabilize, if everybody gets more comfortable with it over the next year, hopefully we could see interest rates go down just because of that, because
See, but
more people are
then
investing in it.
You bring interest rates going down, and what, like, if you look back at the housing affordability index, like we have been unaffordable for a long time. Things have been expensive and hard to purchase for a long time. I think there's still a big pent up demand of buyers that want to get into market but can't because it's not affordable.
They can't lower interest rates too much, or it's going to create a big issue in the housing market.
I think everything will get more expensive
because people are used to these payments now. A $3,000, $4,000, $5,000 a month payment is not out of the ordinary right now.
But
on
back in
average.
2017, that was
you would
crazy
never go
expensive.
there.
No.
But still, something has to break at some point.
For
because
sure.
if interest rates aren't going to go down and housing prices are going to stay the same, then we're just going to have less homes that are selling for the next couple of years. And maybe that's okay.
Maybe that is okay. I think that's a safe bet. Like that's probably the safest
And maybe
trajectory
it's
for us
more of a
versus
mellow like lull in the market where it's plateau, maybe it comes down a hair or it stables out and just kind of stays the same. Like you kind of get this 1% increase for the next year or two.
But we've had a lull for 2 years now.
It's
So
true,
how
we
much
have.
more would you?
That's true.
We're not starting a lull. We're in the middle of a
Yeah,
lull.
we are in the middle of a lull. I would say a healthy percent would probably be like a 3 to 4% increase in prices would be healthy. I mean, I don't want to go back to like 2021 or 2022
No.
when it was like we were fighting people at showings, like trying to show houses.
Showing
Like that
the
was
house and
terrible.
then writing an offer like an hour later.
What are you telling people, Parker? What have you been telling your
I
buyers?
mean, I get a lot of people that are just holding off right now. They're waiting for like like right after COVID 2021. Like I think a lot of people from the media are seeing that
Market's going to crash.
That the market's going to crash. They're going to get the prices that they could back in 2021.
So I saw a pretty interesting statistic that came out was over the last 75 years, we've had multiple plethora of economic crashes, right? Stock market crashes, economy crashes, whatever, right? Over those 75 years, the real estate market has only, year over year, has only depreciated 7 times. And so if people are waiting, in my opinion, and this is my opinion only, but if people are waiting for a big housing market bubble for the prices to just drop, like historically you're betting on such a small chance that it'll actually happen. Like, and I want people to understand like the stock market and the economy and the real estate market are different things, right? You can have a stock market or an economic crash, but the real estate market may not technically crash, right? You think back to COVID, right? The whole market economy basically stopped, but what did real estate do? Shot up. You know what I mean? So they're not tied together. But I think that's something that I try to tell people that I'm talking with is like, don't bet on it because like you're betting on a pretty small chance.
Right.
You know what I mean?
I hope that the stock market keeps acting wonky because it just puts it so people want to put their money into real estate, which
Something
is a
else
different
that's more
pillar
stable.
of the American economy, for sure. I mean, that's like, we're getting into specific stuff there.
For sure.
So what is that? What do you tell your buyers then? They're like, we're waiting. We've been waiting 4 years now, you know, if they're doing coronavirus stuff.
I mean, we just see, prices just keep going up gradually. You know, like we haven't really seen a big dip enough to make it attractive.
Right.
I don't think the economy or the market's really going to make the deal for the buyer. I think the buyer can make the deal for themselves, and like life's too short to like sit around and wait. And so you just need to, if now's the time, like go out and make it happen. And then like the sooner you can get into real estate, the sooner then you'll have something to sell and more equity to utilize down the road. But I've been hearing like our first house that we bought was in 2012. And back then it was scary. Now it's still scary. Like it doesn't change, right?
There's never a perfect time to buy. Like you're either rates, like back in 2020, rates are super low, but it's so competitive. You're still paying over market value for that property, right?
Yeah.
Right now rates are high and it's unaffordable, but right now you can negotiate a pretty darn good deal most of the time.
Yeah.
So what you're saying is that if you functionally can buy a house and have a mortgage rate that's comfortable and find a house that suits you or whoever you're buying it with and your needs, maybe it's not a bad time to buy.
Yeah.
Correct.
Yeah, exactly.
Which is always. That's
Yes.
just real estate.
Yeah.
yeah.
Whenever it makes sense for you and your family to make the move, that's when you do it.
Yeah,
You know what I mean? You
I
can't
just
time
want to
the
do
market.
a quick side
Absolutely.
note on like the stats. We'd love the stats, and for investing and stuff, we're always kind of like pondering all that stuff. But for a family, most of the macro or micro stuff always boils down to if you own a home for 7 to 10 years, statistically, it's going to gain value, and it's one of the best ways to gain wealth if it's something that you choose to do and you're comfortable with. Like there's all those variables. Sorry, go ahead.
No, that's perfect. So what are you seeing? We went over what the numbers were in the past, and we're trying to figure out which way the market's going. What are you guys seeing today? Because I can tell you last night, I have a listing that we got multiple offers on. We got one offer that rolled in Sunday. Monday, we had another showing. We sent that offer a counter. And last night, we ended up rescinding the counter, withdrawing it, because we had another offer coming in. And then we have a listing closing this week, multiple offers on the table.
But I wanted
another
to
listing
point
that we
out,
had
though,
multiple offers on the
that
table.
one you were talking about with the multiple offers that came in and you took the counter back, like that one had been on the market for a while now.
Yeah, over 30
and
days.
so it's kind of like, as a seller, like price the home right, but be patient too.
Yeah.
Like be patient. Like there's times where you're just kind of waiting for the right buyer.
Well, we have done 2 price drops
Right.
on that one, but we started out at the higher end.
Mm-hmm.
They got more motivated, found a place they wanted to be, and then we got more aggressive. But it's interesting that the market is still like there's action happening, right? And if there's action happening right now, then it's a pretty bright spring, I would say, or summer. And tell us what you're seeing, Paden.
We're putting on offers in Mill Creek area, and we've had multiple situations where we've had 7 or 8 offers, and we lost out on them because we were as aggressive as a person could be, and like a really strong offer. But there's just people with more cash out there, And so it's all dependent on your area. If you're buying in Tremont in Utah, the amount of people buying homes out there is significantly less than in Mill Creek, Utah. So that's, you talk to an agent for sure.
Yeah.
So, yeah, I mean, it's hard because I have buyers looking right now, multiple counties, and it's hard. Everyone's like, I want the best price on this house. You know, there's one in particular, they really like this house. They want the sellers to come down. I'm like, well, like they might come down if you give it enough time, but like I can't force them, twist their arm enough to make them come down to this price that you want. So you can kind of gamble it, wait for them to come down a little bit more, and wait, because time does miracles with people, or you can be okay with their price, right? And in this market, I see some buyers that are like maybe too confident in the market's slower, and then they get outbid, right?
Mm-hmm.
And somebody comes in, and then they're like, "Oh shoot!" and then they end up paying more, right?
Or they wait too long.
Yeah,
because
right,
they're like, "Oh,
right.
the price will drop for sure."
Yeah, that's not always the case, right? And keep in mind, like, let's say it's 10 grand that you're apart. 10 grand over a 5 to 10 year period is going to be like you're not going to care about it. You won't notice it 10 years from now.
Well, and even 10 grand on your 30-year mortgage is nothing.
We're not saying be stupid.
No.
But if you
If it's
love
the
the
right
house
home,
and it's a
yeah.
10 out of a 10 for you or a 9 out of 10, like fight for that, right?
Mm-hmm.
Like the house that we bought, it'd been on the market for multiple years. I want to say like 3 years. I think every one of you guys had been through it at one point or another. I showed it so many times. I'm like, this is a cool property. And I tried to get like 5 buyers to buy it. None of them were like, could really see the potential there. And then finally, I told Carly, I'm like, we should buy this. There's all these things that we could do. I have big ideas for this. We didn't get a great deal from where they were listed on. Like, this property sat on the market for multiple years at that price. I got a little bit of a discount. We negotiated it for a while, like it was a few months, finally put together the deal and closed on it. And I still feel okay about the deal because I have like a vision and a plan for it down the road.
That comes back to what kind of you brought up earlier is like, as a buyer on any particular home, you need to kind of set a high point and a low point, right? And so when you're considering making offers, you need to depend on how much you love the home and how many boxes that home specifically checks. You need to make your offer specific to those high point and low point, whether you make an offer at your highest number, and if you don't get it, you're okay that you didn't get it because you're not paying more than that number, or your lowest offer because you don't want to pay any more than that. And if you don't get it, you're okay because you didn't want to pay any more than that price for that
Your
property.
ceiling and your floor.
Well,
Yes.
take that philosophy into every aspect. If there's a home that's listed for $365,000 and you only want to pay $350,000, but the home works perfectly well for you, just have the mindset that if that home disappeared tomorrow, would you regret not putting a $365,000 offer on it? If you don't regret it, then whatever.
Then great.
You know? But take your pride out of it and decide if you do or don't want the property.
It's never, so this happens to me all the time on KSL. I'll see something I want and I'm like, I think that's a pretty good deal. I'll negotiate on it a little bit and then they'll be like, yeah, if you come grab it today, like I'll sell it to you for that price. And then I'm like, but is it that good of a deal? I don't know. And then I sleep on it and then the next day it's like sold. I'm like, shoot, that was a good deal. It's the same in real estate. Like you never really find out how bad you want it until there's like somebody else that wants it.
Well, and you always have time in real estate to double check. I'm not saying like shoot out frivolous offers and stuff, but if you like a house and you like the price on a house or even medium, submit that offer on it if you have an intent to buy it. And then if for some reason you get into the house, you start going through the house, the costs are too high. That's the purpose of the due diligence period.
Right. And you can renegotiate during that time frame if you need to.
Absolutely. Now don't go too crazy with that, but that's as long as your intent is to try to buy the house, then whatever you choose to do is okay.
Right.
For sure.
So what are you telling buyers right now and what's your advice for sellers?
Buyers the same. Whatever offer you're submitting, whatever you want to see, as long as you're doing it with no regrets, that's the plan. So
no regrets. Real estate with no regrets.
Real estate with no regrets.
Good luck with that one.
Well, and everybody really wants to play the game right now. And on rentals, that makes sense. Play the game as much as you can because there's numbers that back everything else. If it's a personal house over $5,000, like there's a value to a house working perfectly for you.
Yeah.
So if you didn't get that house and you regret it, it's not worth $5,000. Now, if the house is $5,000 more than you're comfortable with on a mortgage payment, you don't get it. You're not going to regret getting that house because you've got your numbers. But take your pride out of it. Sellers, price aggressively. We've talked about it 2 or 3 times now. Homes
Aggressively?
There's more.
What does that mean?
If you've got a sliding bar on what's the highest amount you can sell for and what's the lowest amount you can sell for, or with expectations.
Isn't the house just worth what it's worth?
It's absolutely not. there's a specific number of buyers that your home will be suited to, whether that's 1 or 500. And if you only have one buyer that'll buy your house, pricing it more aggressively will make it so that buyer's attracted and you'll sell quicker. If you've got 500 buyers on the house, pricing the home more aggressively will cause multiple offers on the house, and you should hopefully get up to the price that it would market value would be at. If you wait and you price too high with 500 buyers, and so all of a sudden only 2 buyers are looking at it, and then you have to lower the price because it's been on the market for 60 days, and then half the buyers miss it because they're submitted offers on other homes. Another half the buyers are like, we don't want to submit an offer on the house. We don't know what's wrong with it. You lose your opportunity. So pricing aggressively, don't price half price. I'm not saying that. But pricing at the bottom of what the comparables are showing will help you more than pricing too high.
So you're telling me I should sell my house for less than what it's worth?
That's well,
to be honest with you, I'm just being devil's advocate here because this is what
a fair question,
seller's going to ask.
But that's not true. Though your thought process on that is wrong. Your home is going to sell for the amount that people are comfortable with. Well, it's not my goal to be nice to you. It's my goal to tell people and to explain things in a simple manner. If you have 2 offers on a house, is infinitely more valuable than 1 offer on a house. And so if you're trying to decide, oh, maybe we can get another $20,000 for it, maybe we can get that, and your real estate agent saying, look, dog, there's no other comps that are showing that, and you listing $20K too high is going to make it so you get 0 offers over the next 2 days, then it's going to make it so that you lose out on $10,000 in value because you don't have 2 offers. You've only got half of an offer on a house in 3 weeks. And you decide not to take it because it's super low, because it's a low ball, because they only submitted an offer on your house because it's been on the market for 30 days. This isn't.
So I read something on Utah Agents. It's like this agent private group. Yeah. But one agent was like, don't you love it when agents are like, hey, I have buyers interested in your listing. It's been on the market for 30 days. What's wrong with it? And it's like, that's the market we're in, right? But like, that's what even professionals in the industry right now, they're like, oh, it's been on for 30, 60 days, 45 days. Like,
even some don't understand it. Yeah.
Like why is it still there? And it's like, because like the average listing is on the market for 60 days right now. There's nothing wrong with it. Just there's more inventory, but they don't see that. And if agents don't understand that, the consumer for sure doesn't understand that. So if you want, like whenever I meet with sellers, I give them like a low, a middle price, and a high price. Most people shoot for the high price, but I'm like, realize if we start here, like I can justify the price here, but I can't say how fast it will get sold, if we'll need price reductions down the road. And I think far too often people don't like factor in like what their holding costs are and like delayed time on the market and stuff like that. And then the opportunity costs on other deals that they wanted to get into, but they couldn't because their house is still listed. And so I see it happen a lot. And oftentimes we'll do those price drops and then we'll start to see more activity happen. But typically it's right around like, hey, that middle price range, right?
I really do. My conversation with them was like, what is your goal? Like, are you, if you're not in any rush and there's no current home on the market, you're like, I want to shoot for that property.
Yeah.
Or, you know what I mean? Like you're not in any rush. You're kind of open to the market, whatever it brings you, then sure, we can list high and see if we hit that one specific buyer that loves your property, loves that specific location, and it works, right? Then awesome. But if you are in any type of rush or you're like going out and looking at other properties and you're wanting to make offers, or there's a specific home on the market already that you're like, I would love to get that property, just understand that like you shouldn't list at that highest price point because it's going to take some time to get your home under contract, more than likely. And if that is the case, you're most likely going to miss out on the opportunity to get that specific home that you're shooting for or something like that.
And people work backwards all the time. They're like, this is the house I want. Paden, get me into that. And it's like, that's a very tall order
Cool
that
it,
you're-
dog. Yeah.
that you're asking for there. But I think going back to what you were saying, if you know what you want and you can have the vision laid out, like we can work with you to get to that point, but you need to have the plan mapped out. Like, this is what I want to have happen, and we can guide you in the right direction, the right time frame, and make all the pieces line up perfectly.
Well, and I'll quit blabbering so much after this. The two variables that I don't think people ever take into account too is real estate sometimes is a crapshoot. We've seen a listing in our brokerage that was listed for a specific amount. They got an offer for that specific amount. They took it off, and then they listed it for higher, and then they got more offers on that listing for a higher price.
Right.
And with no comps, with nothing to support that would happen. So like there is always a crapshoot, and the
There's
people.
some luck involved for sure.
Yeah, it's not necessarily that I'm trying to say our advice, real estate agents' advice, is not always 100%. This is exactly what's going to happen.
Sure.
It's based off of the data that we have at hand.
Right.
We can give you the best advice we can with the data at hand. And as much as everybody wants to act like we should do the lucky stuff and try for the 10K above and stuff like that, statistically, doing the numbers situations are going to work the best 9 times out of 10. And there is always 1 out of 10 or 1 out of 100 of like a lucky whoopsie doopsie, you know.
For sure.
So I just wanted to say that out loud.
Yeah.
And the people that are it's you're focused on how many people are buying your house, and it's not the specific price. At $390,000, you'll have 15 people who are considered buying your house. Where at $405,000, you'll have 1 person. And so that's a good way that I tell people to kind of look at it as well.
Yeah. I think another big thing that we like run into is people who are now trying to sell their home to purchase a new home. They get really uneasy and uncomfortable with the idea of having their home listed or under contract without knowing where they're going next. I think that's a really scary thing for a lot of people to do, and it's understandable as well to know that I could sell my home and not have a replacement property to go to, and I have to find some temporary place to live for a month, 2 months, or whatever that period is. Ideally, we can make dates line up and you can move one time, but just like also understand that we're coming into spring. More homes are going to be coming on the market every day.
Yeah.
And if you're in that situation right now where you're trying to get your current home sold so you can purchase your next property, but you're not seeing anything on the market that's like checking all the boxes, have a little bit of confidence that there's more properties that are going to be coming on the market every day. And you're in a good time to at least have a good option. Most likely is going to come on the market.
Well, and there's strategies for that. We got the subject to seller
Right.
finding replacement property, and we can guide you through all that if you just let us know what your goals are.
For sure.
We can
And
make
give
that
us
happen.
time to figure it out.
Give us time, yeah.
What do you think, Parker?
I don't know. I'm still trying to figure it out. It's just running through my brain a million miles an hour right now.
So let's recap it and bring it home because Paden's got a movie to get to.
We're going to watch Minecraft.
So if you're a seller right now, don't be greedy. Things are taking a little bit longer. Price aggressively if you want to get it sold. If you're okay waiting, like we can
Work with you.
We can try the market, experiment a little bit, but stats are like indicating that you'll probably have to do a price drop. You'll sit longer. It could just take more time. If you're a buyer, I love working with buyers right now because it's not like there's a lot of inventory to go see. It's great. There's a lot of options. You have some time, but don't get overconfident in your ability as a buyer because it's pretty sixes, buyers and sellers, right? It's like who's going to win the fight? It's pretty flat right now. They're just duking it out. Neither one's winning. It's like a pretty flat, even market.
For sure.
You guys agree?
Absolutely.
So
Absolutely.
if you're getting into it, realize it's a pretty fair fight right now. And if your goal is to get into a house, there's no better time than right now.
Yeah, and Parker's a great real estate agent. So if you're looking to buy or sell a house,
Call Parker.
call Parker.
Yes, call
Yeah.
me.
Got a baby on the way.
Yeah.
He's got another mouth to feed. So
Look, guys, he's got to sell a house, all right?
okay. Well, thank you guys for watching. Till next time. Take care.
See ya.